Hi, everyone. Today, let's talk about Binance's offer to buy FTX's non-US operations. Then we'll talk briefly about the midterm elections. And then we'll go over the Disney earnings report. Then we'll go over the markets. And then we'll go over my results for the day. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Binance offered to buy FTX's non-US operations to fix a liquidity crunch. The Binance CEO said there's a significant liquidity crunch and that they signed a non-binding LOI in order to acquire FTX.com to help cover the liquidity crunch. This obviously has been very bad for cryptocurrencies, which is now pretty well entwined with the rest of the economy. And when cryptocurrencies go down, that definitely affects some companies in the US, and those companies are in the major indices. This marks a major collapse of a company that was valued at around $32 billion earlier this year. Another capital firm valued the company at $25 billion, and the founder was pegged at around $17 billion, mostly from his stake in FTX. The reason that I'm bringing this up is that if there is a liquidity crisis, this could be the first domino to fall within the economy, and if this kind of event expands into other companies, that certainly is a warning sign that we could see some more companies going bankrupt and a deeper depression than is expected next year. Moving over to the midterm elections, obviously this has an effect on the economy and the US as a whole, and we can see that the major indices were up a little bit early in the day before there was a broader sell-off in cryptos, with Bitcoin going down quite a bit due to the news that we just talked about. But anyway, getting back to the midterm elections, they say here a gridlock is the best case scenario for the markets. This takes out most of the unknowns, because if the House and Senate are split, that means they can't pass wide-sweeping, unsupported legislation. That's usually good for business. That means they can't change the business environment, and businesses can grow as they expected to, barring any crazy changes that we're not aware of. They also mention here that if the Republicans do win the majority, you should expect the corporate tax to go down a little bit, which again would be good for stocks. So if the Democrats win the House and Senate, that should weigh on equities. But if the Republicans win, that should be a little bit better. But again, best case scenario is you get a split House and Senate, which means they won't be able to pass very much of anything. Moving over to Disney earnings, they missed on revenues, but they grew their subscriber base quite a bit. 12.1 million new subscribers to Disney Plus, getting their total base up to 164.2 million users, which was about 4 million higher than expected. But like I mentioned, they missed on the top and bottom lines. Looking at the results here, they earned 30 cents per share as opposed to the 55 cents expected. So not great on earnings. Revenue, $20.15 billion versus $21.24 billion expected. And subscribers, they did do well. They did mention that parks, resorts, and cruise lines did do better than expected, raising revenues more than 34% to $7.4 billion in the quarter. And operating income increased 66% to $1.5 billion. So the Disney legacy business is coming back online, still growing at a fast clip, trying to get back to where they were before. They haven't quite accomplished that yet, but if they do, there's certainly some upside in this company. But they do need to perform a little bit better on earnings here and start generating more profits versus just revenue and subscribers. Moving over to the charts, starting with the S&P 500. We did gap up to start the day. We rallied pretty aggressive right into that 385 range that we talked about yesterday. And then we went all the way back down to around 378 before finishing up almost unchanged right here at 381.36, just a little bit higher, about $1 higher than yesterday. Moving over to the NASDAQ, similar story here, gap up, rally, ran out of steam, and then moved back down quite a bit to around 265.50. Before rallying up a little bit and closing at 269.10, so just a few dollars higher than yesterday. But looking at the MACD here, we're definitely running out of momentum. Looks like we're going to get the cross here and then a move back to the downside. So looking for a little bit of bearish movement going into Wednesday. This movement up today was a little unexpected, but it fizzled out right in that range that we talked about yesterday, right at around 272. You could certainly argue that this move in the middle of the day was due to Bitcoin and the Binance issue that we talked about previously, but the market shook it off at least a little bit into the end of the day. Moving over to the Russell, it actually looked a little bit weaker than some of the others today, did not make a new high, at the close. So we did gap up like everybody else, rallied, hit that point of resistance right here. Same range that we talked about, 182, came all the way down to 177 before rallying up to around 179. And then closing right there, basically unchanged from the previous day. Certainly running out of momentum. We did get the cross here in the midday. The MACD is starting to trend to the downside a little bit. So looking even weaker here on the Russell versus the others. S&Ps and the NASDAQ seem to gain a little bit of momentum through the period, but the Russell is certainly starting to fade in this range here going into the close. For ratios today, it's worth pointing out that the NASDAQ did make up a little bit of ground on this downtrend versus the Russell, but we got a big doji here, and it certainly looks like this could be a gap reversal or maybe a slight move a little bit higher and then a continuation to the downside. Still a very strong downtrend. And if we get below this point of support, you can certainly expect the Russell to continue to outperform versus the NASDAQ, at least in the short term. Moving over to individual stocks, we have Disney here on the weekly chart, just to give some perspective. The stock has had a very choppy here during the 2008 crisis. The stock got down to $16 or so after being up around $43 here in the 2000s during the dot-com bubble. We since overtook that, got all the way up to 122, went down to around 83 during COVID, and then almost retested those lows, not quite here at $93. And then going over to the 4-hour chart here, you can see after hours, the stock is moving down quite a bit, closed around $100 per share, and now it's back down to 93 or 90. And now it's back down to $93, $94, right back to those previous lows that we have seen here in October and in June of this year. So if you like Disney and you think their parks are going to come back online, the stock is cheaper than in quite a while after being up around $200 in March of 21, and then it started that big down move to where we are right now. Moving ETSY, we had a pretty good day today, big up move from around $97 all the way up to $101, getting back to those previous highs. Remember, ETSY had good earnings, still trading within this range, but if we do get a breakout above the 144 EMA, up here at 103.19, I would expect this to go much higher and get back up to this around 115 price range. And also here on the MACD, we have good momentum and it's not overbought yet on the RSI. So if we see a continuation here, this might be a pretty decent trade up to that 115 range where I would expect we'll sell off. Moving over to StarBucks, had one of the best days today. Finished the day at around $90 yesterday and then finished up today around $92.70. So a couple of percentage points to the upside after that big rally we had on earnings. StarBucks continues to do well. Moving over to DXY, this is why we had a rally today. You can see the dollar had a big sell-off, big red bar here on the 6 o'clock candle, and then basically went sideways the rest of the day from 10 until close. It's right at support like we mentioned yesterday. This was the area that I thought we would get into if we did get a break past this previous range. It's also the range we were in here in September. If this breaks down, we should expect much higher prices in equities. And after that, I would be looking for the 108.50 range, the previous support area we had here. And then after that, we have 107.70, which would be the lows here. So a couple of areas, a couple dollars apart. But for tomorrow, we're looking to see if this holds. If we get a bounce, I would expect the markets to move down. But if this breaks through, especially aggressively, we should expect the markets to rally. And then remember, on Thursday, we do have the CPI data coming out at 8:30 Eastern. Moving over to junk bonds, pretty uneventful day. Finished at 89.30 yesterday. Got above that slightly in the morning. Finished below that here at the end of the day at 89.18. But pretty sideways here. And the $89 support level continues to hold. If this does break down tomorrow, I would expect the NASDAQ to go down with it and potentially followed by the Russell at least a little bit. Moving over to TLT, surprisingly, we got a pretty decent rally in TLT today. Finished at 93.30 yesterday. We got it all the way up to around 94.94. Almost touched that $95 area, but just short. And we finished at 94.28. So a little bit of a rally here, a little bit of life. Hit a low here. I'd argue this is a little bit higher low. And if we get a decent move up here, we might be stabilizing across the equity and bond markets. Finishing up with the VIX for today. You can see we got a big green candle and we broke through that previous area of resistance. And 24.34 ended up holding. So we got a little bit of a bounce back up to the 9 EMA. There's certainly potential that this could fail tomorrow, especially with the midterms being complete. but I wouldn't expect that to happen until we see the CPI data, and then we should expect some volatility to come out of the markets after that. Uptick here in RSI, so it is strengthening, and there's certainly a decent expectation that this could get all the way up to around 28. Previous resistance is in that range, and if that does happen, we should expect a down day in the markets tomorrow. Moving over to my accounts for the day, I made around $117, $8 in my IRA, and $104 in my main trading account. You can see still in the red here on these positions, just a slight move up here on the Russell. In terms of activity, you can see here, I did have a couple of day trades on the NASDAQ, traded some stock here from 269.70 up to 270.50, so made a little bit of money there. And then I closed out my 262 put that I had yesterday for quite a bit of profit. And then I had another put that I sold in the midday and lost about $30 on. And then I had a couple of trades here. I sold some 263 puts for 76 cents and then bought them back here for 49 cents. So just a couple of cents there, a couple of cents here on the day trade, resulting in those profits for the day. So not too bad. NASDAQ was up about 2 points, so not terrible. Made about half of that money. And I do expect the markets to be lower a little bit tomorrow, which is why I don't have any positions in the NASDAQ going into Wednesday. Let me know down in the comments section what you think of the Binance Takeover, the midterm elections, or Disney earnings, and what is the future of Disney. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.